Alright guys, welcome back to the channel. Well, the unfortunate signal has occurred from the all-time high price for BTC. I've got a lot to get through in today's video with you. The last time we saw this occur for Bitcoin, Bitcoin was down for nearly 5 months. The total drop, the total crash was nearly 34%. And the time underneath the old all-time high, the amount of time it took for Bitcoin to regain all of those losses was 237 days, nearly 8 months. Let's hope this doesn't take as long in this case. As I've got the analysis to show you, it doesn't necessarily mean Bitcoin will be under the old all-time high for 8 months. Plenty more data to get through on that. But first, smash up the likes, subscribe to the channel if you haven't already. This is the analysis that I'm putting out almost on a daily basis. Give me the weekend off here and there. And it's what we talked about on the channel back in March when most people were telling everyone to buy the dip to flipping early. And in this case, I want to show you why that might be a bit of an issue just based on the analysis. But of course, at the end of the day, you do you. If you've got other information out there, do what's best for your portfolio. As of course, I'm not a financial advisor. I just talk about the markets here on the channel. I've been investing for over 18 years, starting with real estate, then into trading in 2010, and then found Bitcoin and cryptos in 2017. So it's your home and macro cycle analysis. Links in the video description for anything that I'm talking about today. Here's the agenda. We have the stock markets to get through. We did see that largest crash day last week, the largest crash that the S&P 500 had done since the COVID drop in March 2020. I've got some time analysis to get through that'll take us into Q1 of 2025. Of course, cryptos, Bitcoin, some more information about the bull and the bear levels to watch. USDT, this is a very important one, which is basically, I guess you could say, called the crash at this point. I'm not saying that I called it, but watching the chart, it definitely had some pretty strong signals to tell us what to do in the markets. That chart was an absolute lifesaver for many. We have the true altcoin market cap, ETH, Sols, memes, and basically talking about buying the dip. But let's start with the simple stuff, the traditional markets, and just have a look at some of the time frames here. By simple, I mean we'll get through it nice and quickly, just looking at the bull and bear invalidations here for the macro cycle, and then of course into cryptos. Because without this thing going up, I think Bitcoin and cryptos are going to have a pretty tough time in Q1. My whole thesis around this is if there's not money flowing in to the rest of the markets, if people are a little worried that they're going to see a recession or prices are going down in their other assets, it's unlikely that they're going to see higher prices in riskier assets like Bitcoin and cryptocurrencies. For the S&P 500, there was a relatively strong close to last week. However, it was still underneath the 50% level. That's from the top to the bottom on the daily chart here. But the good news is you had that higher low beginning to form. Overall, even if there is further downside from this point, there's still some pretty strong support back at 5,700, the two bottoms there through October. And then also the top that came through in July. This is all of 2024. That was the July top before we had that very big crash into the August low. Now, overall, I'm not going to get macro bearish on the S&P 500 unless the August low gets taken out. There are some other areas where we would expect the price to stall and the market to slow down. That's it, especially if it got back underneath 56 to 5,700. That's where I've got here the support and the 50% level. Things would definitely slow down, but provided it stayed above 5,100, then this would just be all of a consolidation to what I think would eventually be higher prices to end out this cycle, further upside. Now, within that, the volatility is going to be difficult. The emotions are going to be difficult. We might, in fact, see much higher prices, but in between it's going to be that uncertainty that scares a lot of people out. We just have to think back to 4 months ago in August. This was extreme uncertainty by a lot of people calling for a new recession, but look what happened there. It just basically shot up, put in a high low, and then kept going to new high prices. So this all takes time to play out, and as I've got here with the time frames, you've got 20 days from the top to the low. That's 20 calendar days and 14 trading days. Of course, no weekends are traded here. So the downside at the moment, 4.6%, down to the 50% is 8% drop. So I'm just looking to how far the market could drop to get to those support levels. And then back to the higher swing low, 12% to the low here is around 16%. Now the timeframes here, this is the interesting one where you can see the highs, and in most cases, I believe all the cases here, they were all-time highs except for back in 2023. These last three highs, the drop took 18 days, and here was 20 days, basically 14 trading days, 14 trading days, 12 trading days to an 18-day low. I've marked out where 20 days is. 17 days takes us to a weekend there. So 12 trading days and 20 days into this low takes the S&P 500 out to roughly the 6th of January, which is Monday the 6th of January, after all of the Christmas rallies and all that sort of stuff. If this thing does continue into that point, well, then we could look for some sort of low to the move down, or maybe an intermediate low in case you start to see lower prices from that point. But the point of this time count is to give us an idea of possibly where we could see a final low form, as that's what we've seen throughout the entire year of 2024. Now, if this does develop into something more, a longer drawn out correction for quarter one, well, then we can look back to the previous significant correction here. This is back in 2023, July down to the October low, and the time frame was about 65 trading days, which is 92 calendar days for that period. Of course, you got July and October, longer months. July, August, September into October being longer months, of course. So the 92 and roughly 62 trading days takes us out to March of 2025. So that's a top now. We've got a top at the moment for mid-December. And if this continues to correct, we've got a date range all the way out to March, which is why I analyze it, because then that's how I protect my portfolio. Next up is the NASDAQ. Big move down again, lower close on the weekly chart here. In terms of timeframes, we could do something similar. So looking out towards the first, second week of January. But for the correction this time, just to give us another time frame to work with, you've got 14 weeks down, roughly 98 days, but to the significant breakout here. Basically, you had a test of the highs at around 18 to 19 weeks, but then it broke out on the 21st week. So that 21st week takes us out to May of 2025. So all I'm doing here is getting a few ideas around timeframes in case the correction develops into something more, because what happens every single time a correction develops into something more is that we see the stories of the economy is crashing, this is just the beginning, the recession is here, further downside to go. But if we just take a look back, it hasn't happened in each of these cases. Doesn't mean it can't happen, but we're just preparing for those cases to look for timeframes as to if it gets to that time and we still haven't seen a recession or a breakdown of the critical support levels that would flip the market from bullish to bearish, then you can basically, not 100%, you can basically throw those narratives out the window, the recessions and all this sort of shit out the window, because they're going to keep stopping people from investing, yet the market might be coming to the end of that correction. And therefore you might start to see higher prices, even though the narratives will keep telling you otherwise. That happened exactly just over 3 months ago in August and September. This was the narrative. It was all over the Japanese yen carry trade. The market bounced pretty strongly. It went into a higher low, which is a strong signal. And you still had very, very poor narratives going on, very, very depressive and bearish narratives saying that this is just the beginning and you're about to see lower prices. Of course, it didn't happen and the market went up from that. That's just one example. So we've had a look at the S&P, we had a look at the NASDAQ, nice quick one today, and then also that time analysis. That to me is probably one of the biggest things moving into quarter one of 2025, especially if things continue to grind out at this point. I think a lot of people will eventually leave the market. It will get quiet again. You'll basically go strip it right back, and it'll just start to grind out, and most people will miss out on that next move, just as they did in 2023 and 2024. So that leads us on to Bitcoin and crypto, some more of the market data here. The liquidations have been a great thing, at least in the short term here for Bitcoin and cryptos. It's dumped and stopped dead for now while I record this. Of course, anything can happen in the next 30 seconds. But the main thing we're seeing here is roughly $600-700 million of liquidations on the 18th. Then we had about $1 billion of liquidations on the 19th. And then again, $800-900 million of liquidations on the 20th. The weekend, not too bad overall, about $500 million of liquidations altogether. So ideally here with that froth in the market, you're starting to see that come out of the longs, which could be a reason for at least a temporary bounce, which we haven't seen just yet. I'll get to that in a moment. But in terms of the fear and greed, so more around the market sentiment, still sitting in greed after these days down. I think we're still in for some more pain. I talked about this last week when Bitcoin hit 73, and essentially it was sort of stuck around 74, 73, 73. I thought we're still in for some more pain here because of that signal that we saw with Bitcoin, the 3-day down rule that led to that 8-month collapse. And we still saw a lot of greed back in March of 2024. And this time we're still seeing it again. And at that point, many suggested using the coin market cap fear and greed index, which is quite different to this index, to read the market sentiment. And this is now at 54, whereas the fear and greed is at 70. So still in the greed, whereas this is at neutral. But through that period of March, you can see here, so that's the March top, the market started to come down. You saw extreme fear on the CME fear and greed index earlier than we saw it on the crypto fear and greed index on alternative.me, which may have brought about the extreme fear reading a little too early in the piece. It really needed to get down into extreme fear on the crypto fear and greed index. So I'm going to watch both, but my lesson from that is to put more weighting on this one here, the alternative.me website for the crypto fear and greed index, to read that market sentiment. The total cryptocurrency market cap is still in a strong position, relative strong position, even though the market has dropped, and it will remain there until we start to see closes underneath that $3 trillion top, which is also the shorter term or the weekly 50% level. Now, we've got further levels to the downside here. So 2.7 is pretty much where I'd start to call things off and just say, look, it's either one, you're going to see a longer correction here, because that would mean underneath 2.7 would be underneath the old all-time high, would be underneath the March top, and it would be underneath the 50% level, which is a relatively weak position overall, especially after hitting a new all-time high price. So that's the worst case scenario. If you started to see the market drop under there and close under these levels, it doesn't mean it can't come back. It's just in a much weaker position. And now if you think you've seen that before, you have. You saw that in 2021. You got the top, the market dropped under, and then you got a new top form. Meanwhile, the weekly dropped underneath those tops and started to close. It then broke the 50% level, so the major range 50% level, and that led to the pretty significant collapse. But you could still use the low to the top, got to the 50%, and then once it broke down there in January, you only got a lower high forming, which then led to complacency. That's where you would sell the rip, so the market ripping higher, sell that rip there, and then the market continued to come down from that point. Now, often what I hear from people is that, why are you saying this stuff? It's scaring people out of positions. That's not the point. The point of the analysis is just to read the chart for what you see and then act accordingly. So if there are weaker signs showing up, well, there are weaker signs. Just like when it's bullish, I'm seeing bullish signs show up, I'm going to start to build bigger positions. That's what I talked about through 2022. I even got in too early, according to some, through this June period, where you're sort of getting in when Bitcoin was at $25,000, even $30,000. But that period looked much more bullish to me than it did bearish. But the majority of people see the low as being bearish and the tops as being bullish. But the tops are where the bearishness begins from. Sounds like a bit of a riddle, but that's where bear markets begin from. They begin from all-time highs. Overall, there's still not enough data to give us a conclusive answer to which way this thing is going. Of course, there are never any 100% guarantees to whether it's going up or down or even sideways. But in this case, I need to see more information that would at least let us know that a bottom is trying to form, and then we're attempting to at least go to a new high. But for now, there's really aren't any signals to say that this move to the downside is over yet. Now, the 3-day down signal on Bitcoin was confirmed on Friday when the market was unable to get back above the Thursday bar. So it had to get back above 102,900, call it 103,000. So it was a pretty damn big ask for Bitcoin to bounce that much. That would have required a lot of buying, which would have prevented the bearish signal from occurring here. Now, I'm not saying dump everything, get out of your positions, it's all going to zero. Not at all. We're just looking at the 3 days down and looking at what's happened in history and just trying to put those probabilities on our side, because you can see after this 3 days down, 1, 2, 3, from the top, and it's 3 days down, lower highs, lower lows. Forget the green in the bar where it closed higher. It's lower highs, lower lows. Little rally, another day down, reversal, higher low, and then the market continued to climb higher. It did put in a lower high, which means it was complacency, and your short-term sellers were basically selling out of the market. Did it again, selling out, which then caused another drop. You had a pretty significant drop in May, higher low. It attempted again in later May, again got sold off at the tops when it reached back to that previous top, and that's what led to our next correction and the final correction into August, which took a damn long time. Now, if I turn the rest of the stuff on, we can have a look back in history how often this has actually come up. It came up at the all-time high in April of 2021, and then led to a lower high that did not get back above the 18th of April, which is what I look at as gotcha bars. Basically, a lot of late entrance, a lot of late buying, and then this locks people into their positions. It crashes, and people don't want to get out of their positions because they say, well, I just need to get back to break even and then I'll get out. And what happens over the next several days, sometimes weeks, is that the price rallies, falls short of basically that sort of gotcha level. And in this case, the top of that bar was 60,440, and it didn't get there and basically failed from that point, essentially locking in more people into their positions. And so if you're in that camp, have somewhere along the way that you can watch the chart for any areas that break down are going to tell you that there's further to go in that breakdown. So hopefully you're not in some sort of stressful position if you start to see the market continue to fall. Now, further back in history, and I've covered this in the channel before, this has happened quite a lot from many, many peaks. And when we went back and did the back testing on the channel here, you can find those videos on the channel, there was a period of around 1 to 2 weeks that from this signal, the price will remain underneath the top from where the signal occurred from. So in this case, if that was going to be the top, and here is your signal, the 3 days down, roughly 8 to 13 days was the shortest time frames, which happened towards the peak of the market. There's 8 and there's 13. So you would expect by the end of the month to see a new all-time high price for Bitcoin if this is going to be one of these shortest times that Bitcoin remains underneath the old all-time high from this signal. And in one of those cases, you can see from 2017, that was back here in November of 2017. There's your top, there's your 3 days down, and then it took 8 days for it to break to a new high. And then you can see it carried on from that point. But when it did that, you're basically at the end. You only had a month left in the game. So be very cautious. If Bitcoin does break to a new all-time high from this point, that you could see some very extreme volatility. A lot of people talking about how rich they're getting, which essentially would probably be a very rocky place to be in for the cycle. And I would think from there that it would all be over. I wouldn't necessarily be looking towards the end of 2025 for a higher high. It could be a macro lower high that forms over the course of 2025. You know, we get this shoot up and blow off top somewhere in Q1 of 2025. I'm talking for Bitcoin here, not for the stock markets or anything else. We could get this big peak and then big move down, and over the rest of the year, you see a lower high form, and then it basically all fades away into nothingness towards 2026 or 2027. When I refer to a significant move above the old all-time high, I'm not talking a few percent like what happened here. It had 4%, $1,000 above the previous top. When you saw this 3 red days, there was an inside day there as well. And it did break the all-time high, or the top in this case, before you had a significant move to the downside. I'm talking really cleanly closing above those levels and then shooting much, much higher, not just some sort of weak attempt and then it crashes from there, because that can also happen as well. And that 3-day rule is still very, very valid, because it's basically called the end to the move itself. I don't think anyone's in the game to take these huge risks for such a tiny reward of breaking the top, right? So that's the 3-day down. We'll come back to it and see whether this eventuates into something worse. In terms of the critical support here for BTC to the downside, you got 87,000 and roughly that low there at 85. So anything underneath that 85 to 87,000, I believe Bitcoin would then look to around that $78,000 to $80,000 level for the next retest of the prices for that support. So that's the entire 50%. Right now we're just using the weekly levels here. So bit of support to the downside for now. 85 to 87 is the first level, and then you look back to around $78,000 to $80,000. The invalidation now to the upside is to break past the resistance at around 100,000. Of course, it's a good psychological number there, but there's 100 to around 101 for this particular move to get back above, consolidate, and then start to grind its way higher for that next attempt at the new all-time high. Ideally, if it is going to grind around these levels, you want to see it happen over the next several weeks, not just a few days, because, well, we've had the 3-day rule. I've gone through that. I won't repeat myself. Now, the longer term outlooks here for the weekly chart. Again, we've had probably one of the worst weeks we've seen on record now. The move to the downside, which has picked up really nicely in Michael's video, a roughly 15% move on that week. And what he's saying here is that when we've seen 15% moves in a week, it generally leads to more downside. There is one occasion here where you had a 15% move, reversal, it did move higher, but then it was met with a lower price than the low of the week that was 15%. So maybe in your books that's a win. In my books, it's still a loss because the market still went lower than that week. That would be like Bitcoin dropping from here, rising up, taking out the high, and then falling back underneath that low. To me, that's still a loss. The signal still works. It has a false move to the upside, and then you're met with lower prices as well. So that's still a possibility, and that could definitely shake things left and right. The bulls will say, well, it's going up, you're all wrong, and then all of a sudden it flips back the other way and shits on everyone. This, to me, is some of the most difficult time to trade. The lows, as I say over and over again, I think the lows are the easiest times, which is why I strongly suggest if you're in this market and you're a bit confused right now, stick with the market through the thick and the thin, the good and the bad. When it's down 70%, to me, they're the easiest times. And that goes for Bitcoin, goes for stock markets, it goes for everything, because most people are so fearful. They don't want to look at the markets at the lows. They just say, stuff it, my portfolio's down, I don't want to look. They're the easiest times. And if you're finding that to be probably one of the biggest troubles, check out TIA Premium. Watch how Michael and I navigate these markets through the thick and the thin. Links to this are in the video description, and hopefully it can help you get on board with your own trading and investing plans for the longer term. Next up is the USDT dominance. This has been a lifesaver when it comes to, I guess, not over exposing yourself to the market at times when it's suggesting it's probably higher risk, lower reward. What does that mean? Higher risk just means there's probably less upside, and now you're exposing yourself to a lot of potential downside. And right now, this has happened again. Each all-time high that Bitcoin has put in, you see a correction, another all-time high, correction, all-time high, correction, and it's put in this beautiful pattern here of lower lows, but getting smaller, and then a higher low, and we've got another higher low here. So not necessarily beautiful for the Bitcoin bulls, but beautiful in terms of a pattern showing up, breakout of the 4.2%, which has been very, very critical. It's what we've talked about for, I guess, weeks now, and it came back and tested that 4.2% and is pushing higher. Now, the better news, I guess, if you want to see some further downside, is the resistance is overhead. We've got two 50% levels to contend with, 4.6%, which it's already been rejected at once. However, put in a higher low, and I dare say that's going to be another small 50% level. Yep, dead on 50% at 4.2%. I know I'm saying a lot of percents here, but the resistance to the upside, 4.6 to 4.75. So best case scenario for further upside, rejection at 4.6, and continue to consolidate and then break down the USDT dominance. Otherwise, the whole market's going to be in trouble if this gets broken. 4.6 to 4.8 as a round number, those get broken, Bitcoin cryptos are in serious trouble indeed. The next levels are back up at around 5%. Then you could be looking anywhere in this zone here between 5 and 5.5%, which would mean a lot of money coming back into USDT and out of the crypto space. Now, if this is at all accurate, which is sometimes hard to get real accurate readings of volume in this space, that is a lot of volume going into USDT at an all-time high for BTC and some altcoins. The last time we saw that level of volume was way back in 2021. Again, I showed you about that 3-day rule from the April high. That happened again here. There's April. There's the move from the USDT dominance. Big volume. Absolutely got, well, the crypto and Bitcoin market got crushed, and USDT took a lot of dominance back in that move. So from a technical charting perspective, and throwing a little bit of hopium and hope, I guess, on it from this point, is that the USDT dominance gets rejected at around 4.6 to 4.8, maybe all the way up to 5%. Here are the levels that you can see with the red line that I'm drawing in here. That's your lower high getting formed at resistance, and then it tanks. Hopefully this takes a couple of months. This is over that Q1 where potentially you see the stock market's go into a little bit of a hibernation here and maybe a few corrections along the way. And then we start to get that big breakdown. Things get exciting again. Everyone's getting rich. But in this time, if that does shoot up, that's going to scare a lot of people away to think that the cycle is entirely over. ETH as well is not looking great. This weekly move here has really just not done much. It's continued to break down. The only saving grace at the moment is that it doesn't break down from 0.032. And this continues to be some sort of consolidation for ETH BTC, which potentially leads to some sort of alt season in Q1 or Q2 of 2025. But for now, with those closes where they are and barely hanging on there, it doesn't seem likely. The point and the price level that I'm desperately watching, I guess, for Bitcoin or cryptos, 0.04. It hasn't done it. It's been a very long time since it's got there. Once it does, that's when you can start to flip a little more into that positive, I guess, side, or the bullishness. And then the big one for me is the overbalance in time and price, provided this low is not taken out. That's up at 0.046. Two massively key levels to the upside for the bulls, 0.04 and 0.046. ETH USD, one slight positive, I guess, from this move down from a triple and double top. There are your tops. And it's tanked to the 50%. It tanked to the 150%. So a fantastic short trade setup is that it closed on the week above the 50% level and above the 50% extension level. So this is the targets for the downside. That's your short-term trade right there. So there's 3,100, and the close was above the 3,200 level, which we looked at last week as being a very key level that the market had to hold up above. It hasn't done anything to reverse the move yet, besides that one weekly close. So at least that's some sort of saving grace for the short term. Prices under this, closes under that level, I dare say we're going back to test 28 or 2,700, if not worse from this point, because that's a pretty dire triple top at that top, unless it can hold above 3,200 and can consolidate from here. Solana, as I said earlier, it broke down from that 50% level. It broke underneath these tops at $190, all the stuff that we're looking at last week to try and hold any sort of ground here, and it broke underneath 210. So put in a new all-time high and has now gone into a massive double top look here. So if this is in fact a double top, I'd be looking towards some sort of 50% level. So macro view here, top to top, 50% is at $138. I only throw this in not to cause a stir, is because that's essentially how you would trade a double top, looking towards any of those price targets. I'm not saying it has to get there, but so far it's got to each of those price targets on the way down that that we've talked about on the channel. And if this is the case, I'd look for some sort of support coming in first. And if that doesn't happen, well, then you got to look further. But forget that. I know that just triggers people, so forget about it. We're not nowhere near there right yet. There's a 50%. Let's see if it can at least hold where it is now. Otherwise, it's got a little bit of trouble on its hands. And the last thing I wanted to show is the old buy the dip here. So this is what I had earlier on, looking at what happens from here. We've got the sols and the memes. Buy now, you know, is that the thing to do? Do you buy the dip now? Well, some people will be talking about buy the dip at this level. It seems, well, how much worse can it get? You're down from the high to the low. The current closing price is 84% down. To this low that we saw last few days ago was 87%. The previous dump that Sigma did, so one of the big meme coins that a lot of people have been talking about over the last few months, did 92%. So 92% to that low is at 0.01, so like 1.5 cents. But if you were to buy it now and it goes down to that 92%, that's a 53% loss. So you can buy the dip. No one's stopping you. Is it a good idea? I don't know. It's up to you. But in terms of your portfolio, because a lot of people freak the F out when this thing happens, they don't realize that it's a 50% drop from even just that current low. From the current price, I should say, at 3 cents down to a possible low of 92% drop at 1.5 cents. That's a 50% loss on the portfolio. One way I like to do it is just let the lows come in and then start to buy on the way up, because I know this can take a lot of hit, and it depends on how you stomach those sorts of moves. If you can't do it and you just keep looking at your portfolio and you threw $100 in or $1,000 in and now it's at $500, I think that's a little bit worse than just knowing that, well, maybe the low is in and we're starting to see higher prices. You're starting to see some swings break out. Okay, I didn't buy the low, but at least I'm on the trend. I'm going up with the trend. But it's entirely up to the individual. You prefer to get these dips. Maybe you're going to be a billionaire on the way up, or play it with the trend. It's entirely up to you. Buy the dips, knowing full well there could be another 50, 60, 70% drop from the current price, not from the top, but from that current price, or you just trade it with the trend when the market starts to turn up. I know it's a little bit crazy to think that Bitcoin could fall further from here, and we've looked at those prices to the downside. 70 to 80K has been one of the final levels before I would look to flip rather bearish on the cycle, but for now it's still holding up at 94,000. Let's continue to play it day by day, because right now there still needs to be more information come through to clear out any of the indecision that the market is currently facing. Like and subscribe. I'll see you in the next one. Thanks, guys.